Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the forex market. It's well, despite that we have really important events on the fundamental side, I mean recent CPI report in general and some other statistics that we will get, retail sales for instance today, market shows, well, not really big volatility, and in general it seems that investors start to understand what's really going on. As we said, based on the technical picture, that butterfly has failed, and we said the failure of the butterfly usually leads to further downside acceleration. Currently, despite that market is oversold on the weekly chart, so I will show you, actually you probably remember this chart from our weekly reports, market stands oversold. Despite this moment, euro currency doesn't show any bounce. And currently on the monthly chart, actually we are watching for the next target on the monthly chart, which is 127 extension of this big butterfly. It's 97.50. So where is market actually is going to. What we could say about recent CPI numbers. In general, this is not a surprise for our readers, as we for a few months already said that Fed rate change will not help to contract and hold the inflation, because the reasons for the inflation stands absolutely in a different sphere. It is not the monetary problems, it is structural problems in the United States economy, is disbalance between the supply and demand. And until they will not be matched to each other, the inflation will not stop. It probably could decrease slightly in the energy sector, so rising prices for gasoline, for crude oil maybe will be a bit lower, but additionally this inflation starts to spread over other spheres. So if you will take a look at the results of the CPI numbers yesterday, actually we will consider it in a weekly report, but just in 2 words I will tell you that you could see that prices start rising in different other spheres: medical, healthcare, goods, services, transportation, and so on. So there starts to catch up with the rising prices for energy, just because energy prices make impact on expenses on any good that you are transferred somewhere. And that's why the inflation will keep rising on other spheres of the economy, not only in commodities. So it means that it hardly will stop in the nearest time. That correspondingly leads us to conclusion that we should be prepared for a possible rate change for the whole percent in the coming Fed meeting. Currently, it is not obvious yet, but I suspect that chances that we get the whole percent change on interest rates are rising. And here we need to say hello to the Christine Lagarde, who thinks to change rate for 25 basis points, or maybe 0.5%. So it's just clear bet and actually decision for further rate for further inflation rising in the European Union. So it means that in Europe inflation will keep going higher, and very soon it will be, well, far above 10%, I suppose, if European Central Bank will not do something. Well, that's what currently stands on the surface. And taking it all together, we do not see any reasons to consider a possible reversal on European currency. Actually, we are watching for 97.50, and right now this performance, despite that we stand on the oversold on the weekly chart, maybe downside action might be not as fast and it could show some minor pullbacks, but as we said, market hardly will stay around the parity for too long. Currently, I suppose that the only reason why market stands there is just oversold on the weekly chart. And on the 4-hour time frame chart, the recent volatility, here I would be watching for a double repo failure pattern. In fact, we already have it. So take a look, we have the thrust down, close above, close below, close above, and close below again, which is below the 618 support, means that this is in fact kind of the double repo failure. Also, using the classical analysis, you also could draw here some kind of the minor widening pendant pattern, which is also could be treated as a bearish continuation one. So that actually all that we have on euro currency. Performance on the Great British Pound is also not very inspiring. So take a look what we have with the 3 drive. Initially we've got some minor bounce, but market right now is turning down, and it might be, if in fact market has shown just minor reaction, completion of this butterfly target and turning down again. So it might be really good signs for a possible take in the short position, just because here is clearly a failure of this ABCD pattern. Head and shoulders has not been completed. This head and shoulders hardly we will get, and ABCD pattern, initial ABCD pattern has been erased and cable is moving down. So this is an anticipation, probably harder rate decision. So this performance, well, doesn't correspond to normal bullish reaction of the market. So this is wrong price behavior for a bullish market, and it seems that market is intending to keep going lower. So, and that also could get the big consequences, as we said, because market already stand at a very important point. Let's take a look. It's breaking the harmony of this area, and downside breakout means the market will be taken out of these lows and drop below 114 area very soon. So that's actually what we have currently. Keep short position, search chances for taking the new one, and let's keep watching for euro currency and see what will happen when it hits 97.50 target.